Nevertheless, it is a buyer's market, we believe, and the ongoing weakness of the market is an opportunity to participate in the Philippines' attractive long-term fundamentals at bargain prices. Okay, although we may go into a bear market, we believe that it's only a cyclical bear market in a secular bull market, meaning our long-term trend is still up, and in between you will have um, you know, pockets of weakness. And why do we remain positive? In summary, because of the strength of our BPO sector, um, and how a weak peso is actually good for the economy. And our consumer sector, we continue to believe will remain resilient. And although interest rates are increasing, we don't think it's going to increase that much. And we'll show you later how our listed companies are fundamentally strong. And later on, we'll talk about valuations and how they are starting to look attractive at this point. Okay, so there is a threat that our OFW remittances will no longer grow or will stay flat. So we assume that OFW remittances will stay flat at around 24 billion, given how positive our BPO sector is. If we combine the two of them, if we combine our $2 earners, major dollar earners, the total is still expected to grow by 8%, and by 2016, and 7.8% in 2017. So at least we're still going to get a lot of dollars. It's not going to collapse. And a weak peso is good for the economy. So one of the things to look at is OFW remittances. In dollar terms, it has actually increased by 185% during the past 10 years, but in peso terms, it has only increased by 126%. So a weak peso is actually good for our OFWs because it will improve their spending power. And of course, a weak peso will make our exports and our BPO sector more competitive against our neighbors to help us attract more business. Okay, as far as consumer spending is concerned, this is something that I've always shared with you. It doesn't matter who the president is, Filipinos always continue to spend. Okay, consumer spending has been resilient and it has been increasing regardless of who the president is. And this is something that is not expected to change. Now, this is a slide that I've been sharing with you um, for numerous presentations already. But things like population growth, median age, they are not something that can easily change overnight. Okay, so our population growth is still at around 1.8%. Median age, I checked, it's still around 23 years old. Okay, and we're still entering the demographic. We're still at the demographic window or the demographic sweet spot where we will see a 48% increase in the productive population, which means Filipinos will have more spending power. Okay, and of course, we still get quite a bit in terms of OFW remittances and BPO revenues. Okay, and the magnitude of rate hikes from the US is not expected to be significant. Okay, yes, admittedly, maybe 100 basis points is quite a bit for 2016, but after that, maybe it won't be as much. And in fact, the 100 basis points might not push through. This is because if you look at the US, there are also pockets of weaknesses. The ISM manufacturing PMI is also below 50. So in the US, it's the service sector that is strong, but the manufacturing sector is also very weak. As you can see, it is below 50. As discussed earlier, when we look at PMI, anything below 50 means that it's contracting. And as far as the Philippines is concerned, we have a lot of liquidity in the system. So there isn't much pressure for interest rates to go up. If you look at banks' loans to deposit ratio, it's 68%, meaning for every 100 peso that we deposit in the bank, they're only able to lend out 68 pesos. So they have a lot of money, which is why even if you put your money in the bank, you're not getting good deposit rates. Okay, and our government is also not really needing money. As you can see, they continue to pay down their debts. It's now down to 45.4%. Okay, and our listed companies remain fundamentally strong. So COL covers quite a bit of listed companies. In the basket of companies that we cover, first of all, we look for companies with a net debt to equity ratio that is greater than 0.9 times. And we've only come out with a list of 7 companies. So out of the 7 companies, you will see um, 4 of them are actually engaged in more defensive businesses, such as power and telco. So the earnings from power and telecoms are more static or more recurring in nature. So in some ways, having high debt or high net DE ratios are acceptable. So in other words, those that are more at risk would be Cebu Pacific, Bloomberry, and MCP because their businesses are more cyclical. Okay, unhedged US dollar debts. Okay, you would have Cebu Pacific and EDC. Okay, so although, for example, Cebu Pacific looks like it's very vulnerable, um, its major offset is falling oil prices. So far, the significant drop in oil price is able to offset the impact of of a weak peso. Okay, as far as EDC is concerned, although it has unhedged US dollar debts, it's only 23.4% of total debts. Okay, and in a year, EDC earns around 9 billion pesos. So a potential impact of 262 million US dollars on the net income is not very significant. Okay, valuations are starting to look attractive. Okay, at 6,259, the PSEI is trading at 15.6 times PE. Okay, this is already below the historical average PE of 16.5 times. Okay, so in the past few years, the PSEI has always been trading at 18, 19, 20 times. This is the first time that's traded below 16.5 times PE. Okay. So if you look at the chart, the Philippines is the leftmost bar. Okay, and the line indicates the mean. So you will see that we are now trading below the mean. In the past, we were always trading above the mean, which is why foreign investors always say the Philippines is expensive. But right now, we are quite similar to our neighbors. Although in absolute numbers, we are still at a premium, at least relative to the mean, we are already below. I think that is more important. Okay? And also, one of the reasons why it is important is because if we talk about the mean, that is the level of valuation we think that the PSEI will deserve to trade at over the long term, assuming that market conditions normalize. So it's quite exciting that we are finally trading at the discount because once conditions normalize, we will revert back to 16 times PE, which means that there is a great opportunity for all of us to buy the market at a cheap level.